if we go ahead and we look at the S&P 500 over the past couple of months, from May 19th to July 19th, that 2-month period there, we can see that the S&P 500 went from about 2040 to about 2164. So that's about 6% growth over time. Now, I know without asking, we probably got a ton of stock traders here in the room, so I'm sure many of you that are trading the S&P are saying, okay, 6%, that's not terrible, right? But you average that out over a couple months. We're talking about 3% a month. And obviously things can change over the subsequent months. It's not really the kinds of returns that you guys are looking for, right? So, what we're looking at now are 12 U.S. stocks that over the exact same period of time grew anywhere from 7% to almost 32%. So the average growth among these stocks was 16%, or about 2.5 times the return of the S&P 500 benchmark over that time period. So I'm going to show you these 12 stocks today. We're going to go through them together, show you exactly how we do this, but I'm going to show you how these trends were indicated and how you would have known ahead of time with a very high level of accuracy that these trends were going to occur, and more importantly, how you can manage these positions with confidence so that, you can actually see yourself starting to see success in the markets and see these, outsized returns. First, we really have to have an understanding of today's global marketplace. So what I want to ask you guys right now is, how many of you guys think that we're living in a global economy? What that means is if we're living in a global economy, what happens across the world, so over in London and Australia and Asia and Japan, what happens in other parts of the world and other markets is going to affect the price of markets here in the United States and markets that you may be trading on a daily basis. So most people agree that the markets are global. I always like to say, people inherently understand this. You feel it in your bones. You see it on the charts. But very few people are really doing anything to incorporate this sort of information into their daily trading process, and that's going to see itself in your results and your P&L at the end of every week and month. So, a really good example of this is what's going on right now in the markets. Or you see things like Brexit recently, and we see those big old candles on the chart, and you go, oh man, well look what's going on. The British pound's shooting down, and what's going on with the FTSE? What's going on with global equity markets? We see those markets moving higher. And so when these big events happen, it's very, very obvious to everyone. They go, of course it makes sense. The markets are global, they're interacting, it's affecting the gold market, the NETI, the Japanese yen. But again, these relationships are happening every single day in the market. When you go in and trade a stock, the currencies are affecting that market, crude oil prices, energy prices. And so these are the realities of the world that we live in, and you really just have to be able to accommodate for these things. So, what is it that's going to have us able to, anticipate these trend changes in the market rather than reacting to market news? Well, we need to be doing what's called intermarket analysis, guys. So this sounds like a very complicated word, but break that word apart. It's very, very simple, right? Intermarket, so between the markets, those relationships that we just talked about, and analysis, so analyzing these relationships and incorporating it effectively into our trading decisions. So, some of the relationships that occur in the markets are really obvious, like the one I just explained, currencies and the indexes for major countries, British pound, the FTSE, Japanese yen, the NETI, the US dollar, the S&P 500. Most people would agree that, with oil is going to have an impact on transportation stocks, right, guys? And, Apple and Microsoft stock, probably going to have some sort of correlation, right? But, guys, like I said, the relationships are a lot more stronger than that, and a lot of different markets are constantly driving and impacting and influencing the price of, other markets, those markets that you have your money in and you're trading in. And so, the problem, though, is that a lot of these relationships really can't be identified with the naked eye. I mean, think about an individual stock, how that's affected by currencies. Tons of trading goes on via the ETF markets nowadays, the futures markets. So a lot of these relationships, some of them seem obvious, but there's really just way too much data, way too much information out there to be able to really analyze it and incorporate it into a tool that has you making decisions, really a singular output to help you make better trading decisions and also accommodate for these market realities. So guys, this insight, it's really priceless. I mean, knowing how these other markets are affecting the trades you're getting in makes a huge difference. So, imagine knowing when these big swings are getting ready to occur, getting in on these trades early. So that's what I'm going to show you guys. What I'm going to do now is open up my VantagePoint software. I want to go ahead and explain everything to you guys so you know exactly what you're seeing here, what it is and why I use it. Now, here we have a stock for Google. I'm sure everyone out there is familiar with Google, maybe traded it via options, maybe just bought and sold the shares. Doesn't really matter much. But here's a chart for Google, and you see we have 3 indicators against the chart. There's a black line there, a blue line, and a green line all the way at the bottom of the screen there. Now, very important as well, guys. These are daily bars and candles. So these are, every single candle that you see on the chart here represents one trading day. And so if we're looking against this chart, let's go ahead and explain everything here so you understand exactly what this is. Now, the black line that you see on the chart there, that black line is a simple moving average. It's very basic, very simple here, guys. All it does is it takes however many close prices from the last 5, 10, however many days, averages them together, and then plots the value of that line. So, if you think about that, that's just averaging prices, kind of smoothing out the data and plotting that value based off of the previous close prices. Now, if you're familiar with simple moving averages, you know the deficiencies of this tool, right? Is that, well, a simple moving average is always going to be plotted and reacting to the last day's close price. So it's always just going to react to prices, and it's really just a lagging indicator. It's really showing you what the market has already done, really giving you no insight into what the market is expected to do. Now, what we see here, though, is we have a blue line there against that black line. Now, what that blue line is a predicted moving average generated via the software. I'm going to show you exactly how that value is generated. But what we're looking at here is a comparison between an actual moving average and a predicted moving average. And this is what, as traders, helps us make much better trading decisions as far as determining the overall direction of the market. What we're looking for as traders, what we really want to be paying attention to are these crossovers. So these instances in time where direction is essentially shifted. So the prediction is now greater or lower, if you're going long or short, than that actual moving average. And this leading indicator allows us to know, hey, what direction do we want to look and start to trade the market in? Now, that's the black line and blue line, very simple, but let me go ahead and briefly explain the neural index at the bottom of the chart, and then I can show you exactly how these values are generated and why this is so important here. Now, this green line here is the predicted neural index, and it can only be a value of a 1 or a 0. You see it's kind of like an oscillator. It moves down from a 1 down to a 0. Now, this is the predicted neural index, and it is an extremely accurate short-term forecasting tool. Now, very important to understand these are daily bars and candles, right? And that indicator is looking out 2 trading days in the future. So you should think of it as a 48-hour indicator anticipating short-term strength or weakness in the market. Now, whenever we have a directional shift in the market, like we see here at the beginning of the chart, we also want to look at that neural index and make sure that's confirming, because if there's been a directional change, great, right? But we want to make sure that we're also have a very high probability of, in the short term, getting that directional move, whether long or short, whichever type of trade that we're taking, but in conjunction with obviously the direction that we want the market to move in. Now, what I want to show you guys are the intermarkets. So all of those related markets that are known to affect, drive, and influence, in this example, Google stock. So let's go ahead. I can type this into my market tree here. We can go down and look for Google. Can right-click, open up the properties here. Now, this is the secret sauce here, guys. Now, what VantagePoint does, it's a VantagePoint intermarket analysis software. It's utilizing a technology called neural networks. Now, this is a type of learning machine. It's a type of artificial intelligence that's able to do 2 very important things. There's actually 2 patents on this technology and this approach to market analysis and market forecasting. The first patent is on finding those significant market relationships. And what you see right here are the 30, up to 30 most important related markets that are known to affect and drive and influence, in this example, Google shares. So if you look very closely at this, and I'll bring up my cursor here so we can point out a couple of these things, you have the ETF markets like the S&P 500 growth, the biotech, but really what I want to point out is, you get those obvious markets, those things that everyone, recognizes, right? Dollar index, crude oil, Japanese yen, euro, the S&P 500. But what this technology, what those neural networks are able to do is find and analyze a lot more of those subtle relationships that take place in the market. A lot of these are positive correlations, some of these negative correlations. Some markets move in tandem, some markets move in inverse, some markets lead and lag other markets. But what VantagePoint is able to do is find those significant relationships, and you can see that we have individual stocks, things like Allstate, a big financial insurance company, pharmaceutical companies, Verizon. So this is what's very, very important, because this is the relationships that traders aren't paying attention to out there in the market, and it's really getting them tripped up. And so they really don't have tools that are analyzing this information and help them know, hey, what should I expect in the market over the next couple of trading days? And so this is the technology that allows us to identify trading opportunities, but understand how to manage them appropriately so that we can have these really nice gains in the market and do much better than the S&P 500. So this is a chart for Google, and very straightforward. As long as that blue line remains above the black line, right, it's still telling you that the direction remains up. And therefore, whatever your trading strategy, if you're trading, call options, if you're day trading, if you're swing trading, trying to collect dividends, it's all about recognizing that opportunity early, but then being able to manage it, hold that position over the long term. Now, what we will notice when we go through these charts as well is, we want to pay attention to the distance between this blue and black line. When that blue line, that predicted moving average, is far from the actual moving average, it's telling you that that represents a lot of strength in the market, right? That the prediction, if it's much higher, there's a lot of strength there. But there are times where traders, so often get mixed up and lose patience in a period of time like this, where the market's going sideways, appears to be no direction in the market, but oftentimes what happens are, these sort of things here, where you've got to maintain that position until that blue line crosses below the black line. Look, the direction is still up. Over the short term, you're still showing a lot of strength, and that's what you want to base those trading decisions off of. And then again, think back to your personal trading. How do you make decisions? How do you manage these positions over time? And if you're using a tool like VantagePoint that's going to point out the direction of the market, but then also have a highly accurate neural index to help you manage that position in line with your trading style, that's what makes all the difference. So let's go through some of these charts, show you some of these opportunities that have been forecasted over the past couple months here. Now, here's Cerner Corporation, and a very good example of where traders get tripped up when there's tons of volatility and consolidation where the market has no clear direction. Here you see we have the crossover to the upside, right? So exactly the conditions we're looking for, that directional change. As long as that blue line remains above the black line, the direction's still projected to go higher. See that confirmation from the neural index confirming that directional move to the upside. And you see the market moved up about 21%, almost 22%, $12 per share. Now, in a company here like Cerner Corporation, 100 shares, that's about what? $1,200, and that's a single trade over 33 trading days. Now, you notice with markets like this, though, guys, is sometimes these markets run sideways. And this is exactly when you need to practice that patience, have a tool that's easily able to determine, hey, the direction is still clearly up here. You don't have a crossover to the downside. As long as that direction is up, you want to be long in that market and ride out that position. So, the worst thing you can do in these positions, guys, is be taking profit down here at 62, because there's still $6 more or $5 more per share coming just in this candle alone the next trading day. So, this is what we mean by that, critically having that patience to, know when you just need to sit tight, hold on to your position, because, I don't want to be getting out of a market if it's obviously planning to have a substantial gap higher over the next couple of trading days. Here's a NETI, another example here. Let me remove these lines. NETI, so same thing. We want to keep this very, very simple as far as identifying the opportunity and then helping us manage it moving forward. Crossover to the upside at the beginning of the chart, confirmed by the neural index. As long as that blue line remains above that black line, you want to go ahead and hold on to that position. Now, the market over those 30 trading days moved up about $33 a share. Guys, if you have 100 shares here, that's about $3,300 in a single trade. And the market's never pushed against you here. And this is what's so critical is you get that entry into the market early, you take on that risk, deal with the volatility, obviously take your trade. If you're a longer-term position trader or swing trader, you're going to run longer-term stops. But as long as that blue line is above the black line, you're going to know, hey, look, this is the overall direction. And once you get that shift, so the blue line crosses below the black line, hey, take that 20% profit, move on to another opportunity where you're getting that fresh trend change of blue line over black line, and go ahead and look to trade there. So about $33 per share to the upside on NETI. Let's go ahead and move forward to CarMax here. So I see we're getting some questions about the neural index moving forward, and let me go ahead. I'll use this chart for CarMax to explain a couple of these things a little bit more slowly and clearly so you guys really go ahead and get this. Now, remember, we wanted to talk, the theme here I want you guys to really think about is obviously your own personal trading, the type of trades you take, but timing and direction, and how those two things are critically important to any sort of trading strategy that we have here. So the blue line we're very clearly going to use to determine direction, right? So that's very simple. Does everyone get that? That blue line over black line, that's determining trend direction, essentially our directional bias on the market. If that doesn't seem clear at all, let me know. I can explain that a little bit further. But what's happening is all those, that neural network relationships are really creating that predictive data, building it into these predictive indicators, these moving averages, and giving you a much more accurate indicator as far as direction of the market. So what we want to do is pay attention to these values, but obviously if the value gets above the actual moving average, that's that trend change. If that prediction is higher, that means that the forecast is essentially up. Now, the neural index, though, you said, okay, well, the neural index moves down from an 1 to a 0. Now, the neural index is an extremely accurate and very, very highly accurate indicator, but it's looking out over the next 2 trading days. So it is really a 48-hour indicator. Now, most of the time it's going to be correct, but obviously the likelihood is when it's not correct is when the trend is obviously in the upward direction. And so how I like to think about this is that the direction is still up. Without a doubt, blue line over black line, you know that's your direction. But the neural index, it's only a 48-hour indicator. So what it's indicating is short-term strength or weakness in the market. Now, one of the most difficult things that traders experience is not knowing when you're in a swing or position trade, when that volatility picks up in the market, not realizing, hey, has the trend changed, or is this just some short-term strength or weakness that I need to sit tight for? Well, one thing about how all this works is the timing of getting into the market. You're getting into this trade about $48, $49 a share. So that definitely changes things as far as any sort of trade management for just about any trader out there. But you'll see that when this neural index slips down to a 0 for a couple of days, well, look what's getting ready to happen. So there is, without a doubt, short-term weakness in the market. We're getting this big dip down, move lower over these couple of trading days, but the overall direction is still up. We see, 3 or 4 trading days later, the market's again hitting new highs. Now, our blue line never crossed below our black line. So as a trend trader, swing trader, still in this position, still, riding that position from about $49 per share, but knowing that there's some short-term weakness coming, that helps me do a couple of things. If you're a day trader and you want to rely strictly off the neural index, take shorter term trades, there's a lot of traders out there doing that. But as a position trader, I want to know, well, heck, I can take some of my position off if I expect some short term weakness and try to buy at a lower price. If I get that signal that the trend has reversed, well, obviously go ahead, get out of the market, take your profits and move on to something else. But with that weakness, it gives me a couple options. I can know to go ahead, tighten up my stops, look to buy in at a lower price, but I don't want to be shorting the market because obviously directionally, we still have a lot of separation here between that blue and the black line. Things get very narrow there, but no crossover. So your direction is still determined, that blue line over black line, but the neural index, remember, 48-hour forecast, just 2 trading days forward. So, you shouldn't try to really day trade with it or, just trade for 1 day. That is a 48-hour signal. So what that tells me as a trader is, hey, look, if the direction's up, I want to be buying over the next 48 hours. And so you can be ready, go ahead, put those orders in, make sure you're ready for, any sort of pullback so you can go ahead and take your position. But think of it just as a forecast. It's really just a forecast so that you know what to expect moving forward through those trading days. So here at CarMax, very popular company here, market trend is still moving higher, but the market about 21% move higher, about $10 per share, guys. So, 500 shares of a company like your CarMax, obviously, we're not talking about trading penny stocks here, but, 500 shares, we're talking about $5,000 in a single position, single trade. And you see how this works is when you get that position, you can go ahead and lock in those stops very early in the trade because you have that better timing. And that alone, the timing, really opens up a lot of, a lot of different things you can do as far as trade management, pushing your winners and really what you need to do if you really want to make exceptional returns, push those winners, when that trend is up, when it's moving in direction, and you have that neural index confirming, hey, this market's going higher, hit those profit targets. Again, this is about your personal strategy, whatever it is. Just make sure you're making decisions in line with what the indicators are telling you, how these forecasts work. So let's go start working through a few more charts here now. Dr. Reddy's Laboratory, let's take a look at this one. So crossover to the upside, see this neural index up at a 1. So you get a lot of strength on those subsequent 48-hour periods where the neural index is up at a 1. But you get that early indication of weakness in the market too. So, you catch this 14% move higher. Market, again, barely moves against you. You got that really good timing as far as getting into that trend. So, easily, 500 shares here, you're looking at, over $3,000. But look what happens here. Blue line crosses below the black line. neural index down at a 0. So, a day trader using the neural index, after this trading day here, as a day trader, you're not coming in and aggressively trying to take day trades over the next couple days, right? Because that's a 48-hour indicator and it's down. So, just understanding, what the indicators are doing, what they're forecasting, your direction at the top here with those predicted moving averages, and that timing. So helping you up, down over the next 48 hours, what should you expect over the next subsequent couple of trading days so that you can make much better trading decisions. So about $6 per share in about 16 trading days, really nice move there, higher, telling you go ahead, take that profit up there at 53. Moving forward to Abiomed.
Hey, real quick, Matt, we've got a question from an attendee here.
Yeah,
wanting
certainly.
to know what factors is VantagePoint looking at to generate these forecasts?
Okay, so what the technology of the software is doing is it's analyzing the 30 most closely related markets that are known to affect, drive, and influence the one target market that you are trading. So in the example of Abiomed here, now Abiomed has its own unique set of 30 intermarkets that have been determined. That's what the technology, those neural networks have identified those markets, but then also able to weigh the effects of each one. So is it a more bullish for that market, bearish, and it incorporates that information, all that data from those unique set of intermarkets that are linked to the one target market you're trading, and uses that information to generate these predictive indicators. And so that's what's going in, is it's weighing, okay, well, what is the dollar index doing? What are, in the case of Abiomed, we could, actually, let's do this. Let's have some fun here. Uh-oh, I typed that wrong, didn't ABMD. So we're going to type in Abiomed here and take a look at those intermarkets again. So you see, these are the 25 to 30, whichever the most significant markets that are known to affect, drive, and influence. Now, for almost every market, you're going to see a lot of these big major markets, right? The dollar index, crude oil prices, the S&P 500. These are the things that traders really need to incorporate into their trading every single trading day if they're in fact going in and making their own trading decisions. But VantagePoint really takes things a whole other step further, where it's able to find these significant relationships between competing companies, ETF markets where a lot of the trading takes place nowadays, and other companies that have significant relationships, as also things like interest rates. You see the Dow Jones, natural gas, crude oil. So what you have to understand is that it's not just a static set of intermarkets that are being used to generate the forecast. The technology is able to identify, hey, where are these significant relationships happening in the market, and how important is each one affecting each and every other one. And so this is why this type of analysis, it just is not even close to being possible for individual humans to do, or even get close to performing on a daily basis. And so what we're able to do with the technology is build that output, that really valuable market information, into these predictive indicators to be more reliable, to help us make much better trading decisions as far as direction and timing, because it's those big moves that are happening in the ETF markets, or the dollar, or the NETI and Japanese yen, that can really affect our markets like the S&P or an individual stock. So that's what it really comes down to, is having a tool that's able to analyze how the markets are actually functioning, because it's real obvious when British pound and the FTSE go crazy, but these relationships are affecting markets every single day. Money moves out of one market, moves into another market, and vice versa. So what happens here is we have tools that are extremely accurate, but help us know what to anticipate moving forward. So here in Abiomed, let's take a close look at this. Now, we got the same thing as far as entry. Very simple. Crossover, saying directions move to the upside, direction is shifted. Neural index saying expect that strength over the next couple of trading days. Now, we get a lot of volatility here. You see we get some weakness from the neural index, but look at this blue and black line. I mean, not even close to a crossover here. Still saying, look, the direction is up, remain in that position. Once the neural index comes back up to 1, you see a lot of strength over these subsequent 48-hour periods. And so this is where the day traders can really understand, hey, determine direction, and let's go ahead and start trading this, but kind of come in with a 48-hour mentality, because the indicator is so accurate over the next 2 trading days, not just tomorrow. So and what you'll notice here is, look what happens at the top of the move. When those shorter-term trades or day trades aren't as appealing, well, look what the neural index starts to do. So it's really starting to warn you that, look, the direction is still up. We want to go ahead and hold on to that position. Make sure we capture the longer term move if that's what we're taking, a swing or position trade. But we're not aggressively pushing this market over this period of time, right? Because you're actually getting a little bit of conflict as this blue line and black line pinch closer and closer together, telling you that trend is weakening, but also seeing that very straightforward weakness from the neural index. It says over the next 48-hour period, guys, expect weakness. So that's what, for me, tells me to say, hey, look, you can go ahead. When you get some pops up in the market, take some of your position off. I want to always keep some position on until I see that directional change in the market. But take some of those positions off. Maybe try to go ahead and get a lower price. But when the direction changes, you just need to go ahead and get out of the market. Take those profits, which in this case about $14 per share over about those 22 trading days there. Really nice move there. Quest Diagnostics, same thing, guys. Crossover to the upside here, saying, look, you need to look to go ahead, take positions in the market, expect that strength over the next couple of trading days. Sure, you're going to get those periods of volatility, but we don't have any crossover telling us to go ahead and short the market or sell our position. You're going to get those periods of sideways action in the market where neural index drops down to a 0, and this market is looking weak over the next couple of trading days, but blue line and black line actually starting to separate even more over that time period, starting to slant higher, and you really want to be in the market for this push higher. You see recently, though, crossover to the downside, neural index at the top of the move, showing you a heck of a lot of weakness, saying over the short term, go ahead, scale out of that position. If you're a day trader, not aggressively pushing any long positions there. But that's the key, guys, is just understanding direction and timing. Do I want to be long? Do I want to be short? And what the heck do I want to be doing over the next couple of trading days makes all the difference here. So about a 9% move there, about $7 per share. I mean, easily, buying at least a couple hundred, maybe 500 shares there, over about $3,000 move to the upside. And again, it's the same thing with options here. I see Jake here asking about options trading. As long as you understand the direction and you have that proper timing, those option contracts will be cheaper. You're going to have a lot of essentially leverage that you're using, but the value of those option contracts as price moves in that expected direction is going to move up as well. I mean, certainly there's some things about, the deltas, time decays, things like this, but the biggest, most important factor is that market moving in the direction of the strike price and making you more money and making that option more valuable. So flip there, a few more opportunities here. HCP. And so exactly the same thing. We want to keep things simple here, guys. The software is really handling the forecasting, that short-term forecasting to help you understand what to expect. So crossover to the upside, neural index up at a 1. You see, you get that drop of the neural index, and we get some low lows in the market over the next couple of trading days, but blue line over black line. So we're not getting out of the position. If you're a swing trader, you're holding on to that market. Once that neural index comes up to a 1, subsequent trading days is when you're bullish, when you're buying it. So that's how you have to think of it, is understanding, look, it's a 48-hour indicator. We'll use it in a 48-hour time frame and you'll be fine. But just understanding, hey, direction and what do I want to be doing over the next couple of trading days. Go in there, set up your orders, whether you want to get into the market immediately, set up some limit orders, whatever you need to do, but you're going to have a very clear understanding of what should I expect in this market moving forward. And once you get those indications to say, hey, look, it's all changed. Look to go ahead in the short term. You don't want to be long here. And the crossover to the downside, saying take that 10%, move on to another opportunity. Look for a fresh opportunity, a fresh trade that's just getting started.
Hey, Matt, we got another question that just came in here.
Yep,
Someone's
certainly
asking what the candles are. Are they daily? Why are some red and why are some green?
Okay. Very, very good question. Now, the software works off of daily bars and candles. It's an end-of-day program, and this is very important when you understand why. What happens in the world is Asia opens, right? And then Europe opens, and then America opens, and Asia shut down, and then about noon, Europe shuts down, and then we get to 4 or 5 o'clock, and our markets shut down, and everything's sort of closed, and the world sort of settled down, and everyone's gone to sleep for that trading day. And that's when VantagePoint does its work. That's when it's gathering all that information from what was the NETI doing today? What was the yen doing today? What was, the Aussie dollar, those markets? How are the European markets closing? How did the S&P 500 close? And then use that neural network process to essentially have these predictive indicators, plot future price with a very high level of accuracy. But the only way you can do that, guys, is, again, analyzing those global market relationships via intermarket analysis. So, for me personally, I do all my analysis in the evenings. I'm not sitting in front of my computer all day trying to take day trades because I simply look for these longer term opportunities, but I trade everything. So the futures and Forex markets take like 10 minutes. There's actually a scanning feature that you can scan through all of these opportunities in a second. Find where you want to be directionally and what you want to be doing in that market over the next couple of trading days. So these are all daily bars and candles, and the candles here just represent the price data of that day. The green bars are up days, and you see that at the end of the up day, at the very top of a green day candle, that's where the market closed for that day. So if it's a green candle, it closed at the top of the green part. If it's a down day, it closed at the bottom part, and then these wicks are just representing the highs and lows of the day. So that just summarizes the daily market information. It helps us see things very, very clearly. But again, you could take these bars and candles. You could actually take the bars and candles off the screen. You could take out the name of the chart there, because the really important part is understanding that, look, that predicted moving average is crossed above the actual moving average, signaling that market is expected to go higher. So go in and make your trading decisions, based off of, okay, what is the volatility? Where can I go ahead and accept prices? But knowing, look, the direction's up. Go ahead, look to be long. If that neural index is up as well, you've got that double confirmation. Expect some strength in the market over the next couple of trading days. So I hope that explained that very clearly. But yeah, it's just the price data, and it's very important. So many people get wrapped up in looking at 5 and 15-minute candles and all this stuff. Well, they're not doing any type of market analysis, and what they're actually doing is they're looking at indicators developed from past prices, and only past prices from the individual single market that they're looking at. So it's kind of like trading in a vacuum or with horse blinders on. You're really missing the big factors, these big macro things that are affecting these markets every single day, day in and day out, and affecting your trades, your P&L, your equity in your account. So very, very important to understand. You got to wait for all those global markets to shut down, analyze all that important price data, and then generate these predictions looking forward for the next couple of trading days. So moving forward here, HCP about a $3-4 move, about a $35 stock. So easily 1,000 shares there, $3,500 move to the upside there. Tyson Foods here. One thing that's actually important. The neural index is a 48-hour indicator. So we want to use that indicator over that period of time here. Let me go ahead and expand this out a little bit. We want to use that indicator as a 48-hour indicator, right? So very, very important. But the software actually, it does generate predicted highs and lows from the software as well. So if you actually look to the right-hand side of the chart, and I'll actually draw on here for you, see this bar right there? Now, this neural network process, it's able to, it incorporates information to our directional, the blue line over black line, the highly accurate 48-hour indicator of that neural index. But there's also two neural networks they're identifying predicted high and low prices for the next trading day. Now, you can trade. I actually see Terry here asking a question about intraday trading. Now, you can trade off of these levels produced from the predicted high and low. You see we have a candle here. So what it's telling us is a predicted high, that's the predicted low. Now, essentially the predicted range for today's trading day. Now, if we go ahead, and I'll bring up those predicted highs and lows for you guys to take a look at. And this is why this is so effective. You see, the crossovers came through all the way back here. So this is where we're looking to go ahead and take a position in the market. But every single day before the trading day, you're going to get that predicted range that you see at the very right-hand side before the trading day happens, before that candle exists. And so those values are going to help you make much better trading decisions in the market as far as where you may want to be adding on to your position, knowing that, hey, I want to be along, the direction is up, and if I get down near the predicted low of the day, I want to be looking to take that position and look to trade that market higher. Now, you can use this information in more, it's going to come down to your trading style. If you're a day trader, you're going to be taking positions and trying to use that predicted high for profit targets this time. You see how we come up, hit these predicted highs, move up, move higher. But one of the best things that you can do for yourself is actually, because the neural index is so accurate, understand that, hey, you want to go ahead, buy that market. You've got the direction and everything, and the market may not hit your profit target the first day, but you don't have to, get out of the market. Probably it will hit that value the next trading day. So, this is what's very important, just develop a trading strategy that doesn't have you so neurotic, forcibly getting in and out of the market within a day trading period. I want to be in the market. If it's still going up, I want to be long the market. If I've gotten, taken money out of that market, I want to go ahead and be adding to my position, and that's what I want to be using these levels for. You get those dips very close to the predicted low. A lot of day traders, what they do is they look to buy in the bottom half of the range. Buy in the bottom half of the range and look for that market to close near the high. So very, very important. But incorporating that information into your trading, what I like to do though is I like these long-term positions. The software is able to identify these major reversals, and once that market moves in my direction, I want to push that winner. And that's what the neural index and these predicted high and low values really help you do, is understand, hey, where are the probabilities where I should be going ahead and pushing this trade, taking these profits, and really trying to go ahead and make some money. Here's Smith & Wesson. Another good example here, crossover to the upside off a gap up here. We got about 24% move to the upside, but this is key, guys. Think about, if you're a short-term trader, if you're directionally trading the market. Here's Smith & Wesson. You get this big rally higher in the marketplace, but look what starts to happen with the neural index. I mean, when you compare these two periods of time, as far as your trading, you've got one where the neural index is strongly up at a 1. You're getting that strong rally. So that's where your attention goes if you're using these tools. You're running these scans to find these crossovers every night. You're identifying the crossovers, following those markets, and understanding when that neural index is still up at a 1, representing a strong opportunity. But look how nasty things start to get here for day traders. I mean, you got a lot of days there where the neural index is strong, down at a 0. Your blue and your black line are pinching very, very close together here over these times. So that prediction and the actual are very, very narrow and close together. And so this what tells you, look, there actually really is no strong direction. We may still be in an uptrend for the most part, and that's why we're getting these moves higher. But you see that neural index going sideways, and the market's just going completely flat. So, as long as you understand, this is what I'm using for direction. This is my forecast over the next 48-hour periods, and make sure that just your trading strategy is in line with what the software is predicting. I mean, it sounds oversimplistic, but that really is what it's about, is understand, hey, am I a day trader? Well, let me use the shorter-term tools. Am I a longer-term swing trader? Let me use the longer-term tools and deal with the volatility and adjust my position as that market moves appropriately. So it's very, very simple, very intuitive software to use, and this is designed by traders. We understand the difficulties of how these things work, but this software has been refined and tested over now 25 years. So, these methods have been tested for quite a long period of time and hold it up over a very significant period of time in markets moving up, markets moving to the downside, moving through earnings reports and all this fundamental data, still getting these extremely high level of accuracy via these indicators. McCarrick here, crossover to the upside here, neural index strongly up at a 1. Again, keeping things very, very simple, but you see what happens here at the end of the move, right? Market goes sideways, pinching close together, neural index down at a 0. Well, $13 per share move to the upside. 500 shares, you're talking about $7K plus on a single opportunity, and that market never, never moves against you. So that's why timing's so critically important. You want to take advantage of these much longer-term, really nice, significant trends that we see often playing out in the markets, especially over the past couple months here. Ross Stores. See the volatility here. Things get a little screwy, but look at the neural index. So, I mean, your direction is up, and that neural index for what? 28 out of 35 days or so, I mean, is telling you, look, be long the market, expect strength over the next couple days, and that's where the move is, guys. A super nice move up there, about 14% rally higher, but look how things start to shift. Your predicted moving average, your actual pinching close together, your neural index showing some weakness over this time period here, getting that crossover that says the direction's changed, go ahead, look to take that 13%, move on to something else. And what I want to show you here, guys, is how we go ahead and move on to something else and actually find these fresh opportunities via a scanning feature in the software. So does this make sense to you guys? Does it look like something that, okay, well, I understand the blue line over black line. I understand direction. I see what you're doing there with the neural index as far as the short-term 48-hour window. If that makes sense to you guys, let me know. If you have any other questions, let me know as well. Last chart here as far as the 12 markets that, vastly outperform the S&P 500 here, Simon Property Group. So, same thing every time, guys. Blue line over black line, that's what we scan for as traders. That's what we're looking for as far as opportunity, but a huge rally higher, about $24 per share. 100 shares are either $2,500 on just a 100 share position. So very, very important, very, very it's a very, very great tool to use. Makes a very significant difference as long as you understand, look, here's what the forecast is telling me, here's what it's telling me over the next 2-3 trading days, and I'm going to know how to adjust my position to minimize those risks you have in the market, but maximize your probability of capturing these really nice rallies. You need a lot of patience to sort of wait through some of these time periods and volatility, and you really need to have really clear tools to make these indications for you. So let me go ahead and show you that scanning feature, though, because this is one of the great things. I did have a question about some of these other markets. Randy here was asking about futures and Forex markets. The software we forecast for over 68 futures markets, I believe. So you've got the indexes, crude oil, the meat, metal markets, softs, as well as the Forex market. So if you trade in the currencies, all the major pairs, as well as the currency cross pairs, so things like British pound, yen, all that. So if you trade in those other markets, the software works exactly the same way. So as far as determining your direction, the neural index to help you make those trading decisions, it's all exactly the same thing. So you don't have, if there's not many opportunities coming through in stocks and you have the capacity to trade those futures in other markets, tremendous opportunities, but you have all the tools that you need because the strategy, the forecast, the accuracy is the same, whether it's to the upside, whether to the downside, whether crop reports are coming or earnings reports. That level of accuracy is over the very, very long haul, up or down. So let me go ahead and I'll open up the scanning feature, though, because this is what literally, I spend probably an hour in the evenings maximum, and that's even putting in orders, adjusting stops, or any of this sort of stuff. But the software is able to scan through hundreds of markets in a very, very short period of time. So very, very quickly scan through hundreds of markets and find exactly the type of opportunity that you're looking for. So as traders, what I do every single evening is I'm looking for these crossovers. I scan through all the futures, the Forex, the stocks, and look for the crossover of the blue line and the black line, that predicted moving average and the actual moving average. So what the IntelliScan feature allows is for us to really cut down on the analysis time. We're not going to have to flip through chart after chart after chart, looking at all these different charts and trying to find a good opportunity. The software filters all that out, so we're only focused on what should I be paying attention to now? Where's the opportunity where that timing is exceptional that I should look to take a position? Well, if we want to go ahead and sort for a crossover, you see here I can set this to a 1. You see we scanned through 113 markets, and that's narrowed us down to about 3 just from that crossover condition that we want to look for. We can see we can set that if we want that up or down. There's no downs in this example, so let's leave that up. Neural index, we obviously want that up as a 1 as well. Very, very straightforward. So you see, this is what's going to help us identify new opportunities to go in and trade. But what it really comes down to as far as your P&L, what's going to make the biggest difference is that first couple of trading days. Are you a buyer or a seller at the right time? Because if you miss that first day or two, it's very hard to get all of these risk reward, all of these conditions to line up and make these things favorable. So that's the scanning feature, and what's great about this is you can come in right click, we can click save, we can actually come in and change the name of this. So if we wanted to label it as financials long, or if we wanted to set this for short or day trading, or whatever sort of conditions we wanted to have, we can go ahead and label the portfolio. You're going to have the tool to scan through all those opportunities and help present you with, hey, what's going on right now? Where should my focus be in the market? Vast insight, guys, is absolutely priceless. Imagine knowing where all these markets are going ahead of time, being able to prepare yourself. That's what it's all about. The reality of the markets is we are in a global economy, and that is not winding down anytime soon, actually only accelerating. So thank you all for watching. Best of luck to you guys, and bye for now. Thanks, guys.